Hey everybody, welcome to Forex Trading Analysis for Synergy FX. It is 11:21 p.m. on Wednesday, June the 20th, and today we're going to be looking at three different pairs. But before we get started, as always, quick risk disclaimer. So foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investment, so please don't invest money you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided is for educational purposes only and should not be construed as trading advice or counsel. So the first pair I want to take a look at is the euro, which has been rotating up since bottoms seen back the end of March, or May, sorry. And basically what we've seen is a pretty large correction to the upside. All in all, from the bottom to the top, we're looking at around 380 pips. And a pretty nice move to the upside that if you believe is just a correction, then this would be a very nice point to sell. One thing that does interest me is that RSI seems to be kind of lagging behind. We've seen a lot of down pushes accompanied with a little bit long-term uptrend. So I do think that we do still have quite some way to run to the uptrend for the euro dollar. I think that a lot of the big guys are still going to be positive as retail traders continue to short this market, as it looks like this is just a correctional phase. So I do think we do still have at least 100 pips to run to the upside, if not more. And I think possibly we could retest the 100-day moving average, which currently is at 1.2974. But obviously that'll be lower by the time we get up there. Another level that I think is important is the 1.2626-ish level. A lot of people are going to have this level drawn because it was the lows back in January of 2012 and the lows of, the lows of January. So that is definitely going to be a big level. And working in an office with a lot of guys, almost every single person has a 1.26 level drawn. So this is going to be a huge level for pivot, and right now we are currently sitting just above this level. So if you know anything about breakout trading, I really do like to fade moves. So if you are going to short, this is also not a terrible time to short, but I do think we are going to enter some range bound trading in the next couple of days, and we are going to continue. FOMC came out today, and basically they said nothing. The Fed said that they are going to continue Operation Twist, which is basically in effect the way that they're going to flatten out the bond yield curve, and they're going to continue doing this over the course of at least till 2014, which isn't a surprise. Nobody really thought they were going to say anything major, but we didn't see too many huge moves from the euro today or the dollar. So like I said, I do think we could enter some range bound trading. I do still think we do have a pretty long way to run to the upside. But if you are going to start to enter shorts, this is not a bad place because we do seem to be a little bit extended to the upside because the euro does have so much weakness. The next pair I want to take a look at is the New Zealand dollar, which currently is at an extremely important level right now. We are just between the 200 and 100 moving average, 100-day moving averages. 200 is 0.79961, and 200 is 0.79596. So they're extremely close levels, and price is closer to the 200, but pretty much just in between these two. So a break to the upside or a downside here could cause an extreme move in the trend. My bias for this pair, considering euro weakness, is that I do think that this pair is going to head to the downside. We have seen a little bit of weakness from the RSI, which is currently printing at 65. And we've seen a little bit of weakness as we did enter an overbought territory, so this momentum indicator does indicate that we could possibly be seeing a move back to the downside. And whether this is just a correction or a push to the downside, the 200 and 100 will have a lot to say about that. I think if the 100 does cross over the 200 and we do break back below the 200, that's going to be a great point to sell this pair. And if not, we could see definitely fresh highs by the end of the month. If we do break above the 100, my first target will be the close of this bar here, which is 0.80764, and after that there is a nice area of resistance around 0.813. So those are going to be a couple nice levels at around 160, 170 pips away. So those are the levels for the New Zealand dollar. Definitely a pair that I do like right now. Also considering the fact that we are above the 200 and 100 hour moving average. So this is going to be an interesting pair over the next couple days, and I'm definitely going to be keeping an eye on it. The last pair, which is sort of a similar setup, but right now has also a little bit of a stronger area of resistance, is the Aussie dollar, which is printing below the 200 and 100. The 100-day moving average has crossed over the 200, and we are looking like we could possibly see a run to the downside. RSI is printing at 63, and we have sort of begun a little rotation down from the upside. I do still think we could possibly see up to fresh highs. 200 could be tested, and that is a pretty sizable move. So I will be looking for bounces off moving averages and breaks in the next couple days. I'm not sure that we'll see too much movement into Thursday and Friday just because of the fact that we just did have FOMC and people did sort of close out of the positions for that. So if they are looking to enter back into a position, then tomorrow or the next day might not be the uh, the best day for them to do so. So possibly the beginning of next week could see these levels tested. But if not, we do start to see a push to the downside and a breakdown of longs and people covering their longs going back short. Then we could see again a push down to the downside. And first level I'll be looking at is, well, first of all, the high close at 0.99831, and then all the way down to 0.98743, which is the next lowest low. And if we do continue to push down, then obviously we'll be looking towards the lowest lows in the pair, which currently is closing at 0.96419. So those are the three pairs I want to take a look at. Thank you very much for watching these videos. If you're a consistent watcher, then again, thank you very much. We've been doing pretty well in the market so far, and please continue to watch these. We're only going to get better, and we're only going to continue to add to these. So please follow us during the week at SynergyFX, and good luck trading the markets.